Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Jen Josey. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of Badassery herself, the real Jen Josey. Listener discretion is advised.
Hi, and welcome back. I'm Jen Josey, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's Badassery Bestowment, my little badass gift to you. Today's topic is the importance of incorporating a solid business plan. If you're new to real estate investing, you might feel tempted to jump into deals without a clear roadmap. However, one of the most critical steps to long-term success is creating a well-thought-out business plan. Think of it as your compass, helping you navigate challenges, stay focused on your goals, and maximize profits. Here are 7 ways on how to approach it. Number 1, define your vision and goals. Start by identifying what success looks like for you. Are you aiming for passive income, flipping properties, or building long-term wealth through rentals? Defining your goals will keep you aligned and motivated to move forward. Number 2, assess your financial position. Understand your financial standing, including available capital, credit, and funding options. This helps you identify what types of investments are feasible for you right now and where you might need to grow. Number 3, research your target market. Study your desired investment markets thoroughly. Know the neighborhoods, property types, and local trends. A solid understanding of market conditions will help you identify lucrative opportunities and avoid bad deals. Number 4, establish an acquisition strategy. Decide how you'll find deals, whether through wholesalers, real estate agents, direct-to-seller marketing, or auctions. A clear acquisition plan saves time and streamlines your efforts. Number 5, plan for expenses and profit margins. Detail all potential costs, purchase price, repairs, holding costs, taxes, and selling fees. Create a budget for each property and determine your expected profit margins to evaluate whether the deal is even worth pursuing. Number 6, build a strong team. Successful real estate investors rarely go at it alone. Assemble a team that may include real estate agents, contractors, attorneys, accountants, and property managers to support your ventures. Number 7, anticipate risks and plan for contingencies. Real estate investing isn't without challenges. Think ahead about possible risks such as market downturns, unforeseen repairs, or financial issues, and develop contingency plans to address them. So, a solid business plan is your foundation for success in real estate investing. It allows you to define your vision, make informed decisions, and operate with clarity and confidence. Without it, you risk wandering aimlessly or making costly mistakes. Dedicate time to crafting your plan, and you'll be far better positioned to turn your investing dreams into reality. Now on to today's episode of the Real Estate Investor Growth Network podcast. Today, we are thrilled to welcome back a powerhouse financial expert, Melissa Broughton, part of the dynamic duo behind Busy Bee Advisors. With over 20 years of combined experience in bookkeeping and tax strategy, they specialize in helping small business owners, solopreneurs, and real estate investors gain financial clarity and, most importantly, reduce their tax liability. Melissa, a seasoned accountant, is known for her no-nonsense advice, real-world strategies, and a little bit of playful banter with her partner, Eric. They also host the Real Buzz podcast, where they break down complex financial strategies in a way that makes sense for business owners. I am thrilled to have her back on the show, so welcome, Melissa Broughton. I had to pause because I had we're supposed to have Eric on the show today too, and so I had to quickly rewrite that. So thank you for your patience, Melissa, and I'm thrilled to have you back on the show because you were such a badass. You were on episode 203, and we are now episode 239 for this one. And I am so glad you're here because it is tax season. Boring for so many, but we just love you and you make it so fun. Guys, can you believe Melissa makes it fun? So Melissa, welcome to the show. Tell us about Busy Bee Advisors. And by the way, look at that. Can you see it? Okay, very good. I have a Yeti from them. Melissa, welcome. I'll stop talking.
Thanks, Jen. I love your intro. That music, the music always gets me going. Yeah, tax season is definitely underway. Once again, for a variety of reasons. If y'all haven't heard, they pushed all of the deadlines out from the April 15th date to October 15th. So that is something that you should talk to your tax professional about. There's some other things that have changed a little bit, but we can dive in because I hear, Jen, that you have a list of questions for me. So
I do.
That's the challenge.
But let's quickly mention Eric here because Eric is your better half in life and business, yes. And he is working a lot right now, I'm assuming. So I'm sure he's super, super busy, but I'm thrilled to have you because you are my girl. I can remember last time I interviewed you, we were talking about, we both had facial accidents where we hit the ground.
That's a bonding experience.
Oh my goodness. And I don't know if it's been since the last time, but I've done it a second time. I've face planted. My husband and I, we have scooters because we moved downtown Raleigh and we had to sell the scooters. But anyway.
I don't know that Eric would let me get on a scooter at this point.
All right. Well, this is such an important episode. And let's start with just share a little bit of your background and experience in tax and bookkeeping, and then how it will relate to our listeners who are in real estate investing.
Sure. So I'll make my background pretty fast because I really want to get to the meat of things for our listeners. I spent 20, not to date myself too much, but I spent 20 plus years in corporate America. I started out just like a lot of people who are of a certain age. I started out at the front desk while I was going to school, and then got my degree and was able to move into the accounting department and worked my way up through various companies from accounts payable, accounts receivable to actually running all of the financials for quite a few companies as a controller and VP of finance. So corporate America, I loved corporate America. I really did. I loved the game of it. I didn't mind the long hours. I just minded that I felt like I was missing literally everything with my kids. And in 2016, I started to think about pulling the plug. At that time, my oldest was a sophomore in high school, and it was like it had just gone by so fast. And so Eric and I had talked about it a little bit, and then we, of course, as you and I talked about on the last podcast, maybe we went on a cruise. I made the mistake of calling into the office. Things were a mess. And I decided that I would quit my job on the spot. That is what pina coladas do for me. So we came home, and then I had an accident, hence the facial injury joke. I came home, I had a horrible accident. I broke like literally all of my teeth, and I think we looked at the dental bills. We're like just over $80,000.
Oh my goodness.
I have a great relationship, go figure, with my dentist now, but it did give me time to kind of figure out what type of a business, since it was my turn to start a business, what kind of business I wanted to have. But that really goes back to what you said in your tip that you started the show with, of have a plan. Now, a lot of people use the excuse of, and this is what we hear all the time, they use the excuse of, well, how am I going to know what's going to happen? You're not. And there has to be variables that are built in the plan, but you have to have some sort of a business plan to keep you on track. Otherwise, you will end up so far from where you originally intended to be, that you're doing something completely different. And in most cases, people will fall back into the thing that they were trying to get away from. So in my example, had I not had a plan for the type of clients that we wanted to serve, I probably would have ended up back at corporate America, just because there wouldn't have been enough momentum in my business for it to be the amazing thing that it is today. So,
well, I think you run an amazing business. I've actually sent some real estate investors your way, and they were very pleased. And so I know you are just top notch in what you do. And so we are grateful that you did not go back to plan B. But we just went through an election, and we're not getting political, but
no, we are not.
But so many things are happening where people are so nervous, and what are the changes, what's going on? Some people are excited. So are there going to be big tax changes going on right now because we have a new person in office?
So that's funny that you say that, because there are people on both sides. There are people who are terrified and they don't know why they're terrified.
Right.
And there are people who are excited and they don't know why they're excited. And what I can tell you from the tax professional standpoint is that I can make my best guess and say, yeah, there probably will be some changes that get rolled out, but none of those changes have been rolled out yet. So none of those changes are even something that you need to think about as far as your 2024 taxes. What you do need to think about as far as your 2024 taxes, or if you're somebody new who's getting into the real estate investor place, which is such an amazing space to be in, is to have that game plan in mind. And while there are not, of course, you can't predict everything that's going to happen, but you can predict things like, if I buy a house, how much can I reasonably rent it out for? I went to a conference 2 weeks ago that was a real estate conference down in Georgia, and I got to speak. And one of the topics that I talked about, of course, it was tax related. I had somebody say, "What did you talk about?" I told the story of my romance with my husband. No, talked about taxes. And what we talked about were what your benchmarks are. And it's really tough if you don't have those benchmarks to know when you should pass a deal and when you want to go for it. And there's probably more that you're going to say no to than the ones that you'll say yes to. But the biggest thing that you should look at if you're a brand new investor is what the rent prices are in the area that you're looking at investing in. And I think that's huge. There are certain areas where you can still purchase a property, put a reasonable amount into it, and the rental prices, and I'll give away some secrets. South Carolina, certain areas in South Carolina, areas where there's military bases, are usually a great spot to look at investing. But if you're far away, let's make sure we're including what a property manager would charge in your costs. Because if you're 3,000 miles away like we are, and we're looking at purchasing my son's house, our oldest son's house, from him, because it's a cute little house, it's in a great neighborhood. There are lots of things about it that make sense, but what we're finding is that finding any trades out there to fix things is incredibly difficult. And we can't find a property manager that'll even call us back. So maybe it doesn't quite make sense, because if you can't get those things lined up front, those should be some warning signs.
Very, very well said. And I like how you were talking about pricing and knowing where things are going, because a lot of times when newer folks are getting into this industry is they get emotional and they want to go after, they think they're going to win the deal, but then they just overly pay for things. So I'm glad you brought that up. But I want to know, because it is tax season and I have gone through, you get a whole bunch of emails in the beginning of the year saying, here's your W-9, here's this form for this and this and that. So what are some W-9s that real estate investors should be getting right now? And the one person I'm thinking of right now that I forgot is my cleaning team for my short-term rental, because I definitely paid them last year or so. Who are some key people that we need to make sure we're getting the W-9s to?
So the 1099 system as it is really like it's really a dinosaur, right? It's almost like this. It's on a I can't come up with the word, but it's like an honor system kind of a thing, and it's really set up for um a fully operating business that has an office, that has an accounting department, that as soon as that accounting department is issuing a check to a vendor, they are making sure before they issue that check for that first payment that they've sent that vendor and received back a W-9. And what a W-9 is, and I'll go back a little bit, but what a W-9 is simply a statement of information that includes the person you're paying's basic information, but it also has their business entity type and then their either EIN number or their social security number. The reason why you need the W-9 is if they're a corporation, it will let you know on that W-9 form that they're a corporation. And in the event that they are, you don't need to worry about issuing them a 1099. You also don't need to issue 1099s to anyone who you've paid less than $600 in the calendar year to. So those are kind of two benchmarks to pay attention to. The reason why the antiquated system is, in my opinion, problematic is that all of us small business owners, because you're considered a small business owner if you have less than 500 employees. 500 employees makes you a pretty big business, in my opinion. But all of us small business, right? All of us small business owners out there, we're just going along and keeping up with things at a crazy pace throughout the year. And then all of a sudden, come November, if we're proactive, we're going, oh, I need to get a W-9 for this person, a W-9 for that person to get their information. And often it's a lot harder to track people down when you've already paid them than to track them down before you've paid them. So if you were to look ahead a little bit and you think you'll be using this vendor on a regular basis before you cut that first check, or if there's somebody who you use pretty regularly throughout the year, get that W-9 out to them as soon as possible so that you can send out 1099s without too much of a problem. QuickBooks Online makes it super easy, not to do a plug for Intuit, but QuickBooks Online makes it super easy to send out 1099s electronically. I will say, though, that the electronic filing deadline for 1099s ended, I think, on the 28th. So it ended 2 days ago. You can still mail copies, but you really have like 2 more days to get them mailed before they're considered late. So if you've missed the deadline, I definitely recommend that you talk to your tax professional before you just randomly send those 1099s out, because there can be some, I don't want to give anybody bad advice, but there can be some repercussions to sending them out late. So make sure you understand that before you just kind of have a knee-jerk reaction and send them out.
Okay, so you said a lot there, and I appreciate that. And no, that was great. So I'm rewinding now my process, because whenever we hire someone who I know I'm going to be paying more than $600, we do ask them to sign a W-9. So we actually keep them on file. But we have I'm using this as an example. We are working on a new build right now, and say our framer is working from December 31st into the new year. I have to now redo anyone who I've been working with last year. I already have their W-9s. I have to get them to sign a new one for this year, correct?
Nope.
Ooh.
Not unless something has changed with their business entity, but you're absolutely fine. So let's say that framer that you're working with. So let's say in 2024, he operated his business as a sole proprietor. And at the end of 2024, he talked to an awesome tax person. And that awesome tax person, maybe he called us, that awesome tax person said, hey, you made a crap ton of money this year. You're really paying just by self-employment tax alone. You're really overpaying on taxes. So at the end of 2024, maybe beginning of 2025, that framer became a corporation. Well, you wouldn't have any way of knowing that unless that person sent you a new W-9. However, there's nothing wrong if you send him a 1099 or her. I don't want to discriminate. I'm sure there are female framers out
His
there.
name is Rafa. We love him. Keep going. Sorry.
Okay.
Yes, Rafa.
Okay. So you don't necessarily need to. It's not your responsibility to send him a new W-9. You certainly can if you want to, but it would be more his responsibility to let you know, hey, I'm a corporation. You don't need to issue me 1099s this year. So you're pretty good. I would say every 3 to 5 years, if you're using the same vendors, maybe then look at issuing new W-9s, but you're pretty good from year to year.
Awesome. Excellent. Thank you for that. So we're talking about habits and getting into certain things here. So what are some other habits that every real estate investor should develop when it comes to bookkeeping and taxes?
I'm going to say the first thing, and this is like if I could have this sewn on a pillow and just hand those pillows out to clients.
Maybe put on a Yeti cup.
Mug and those pillows and Yeti mugs out to clients. It is so much easier to build a foundation where you have your business plan and you know what your goals and your objectives are. So much easier to do that at the beginning than to kind of say, I'm open to anything that the universe throws my way. Let's see what happens, and try and recreate your books or try and figure out what bank account goes to what. So the first thing I would say is make sure you have separate accounts for all of your properties. It does not make a difference if they're all at one bank. I had somebody who heard me on a podcast. She called because she had a complaint. And I thought normally my admin is like such a bulldog with people who have random complaints, don't get to talk to me. But I said, she heard me on a podcast and she had a bone to pick with me. That's what she said. And so I get on the phone with this lady. She was lovely. She said, well, you said I had to open up bank accounts at different banks. And I said, well, no, I never said you had to open up bank accounts at different banks. That would be crazy. I have 35 properties. It is crazy. Yes. So they don't need to be at different banks. You can have the accounts at all of the same bank, but you do need to have separate accounts for each of your properties. That is something that it still surprises me that I see investors who are brand new and investors who are seasoned that they still do. And it makes it really challenging for your bookkeeper to be piecing things together. It makes it challenging for your tax professional who has to file individual forms for each property to piece together. And if you think that after the year has passed, that you as the property owner are going to remember all of the details of what happened in March, you just won't. So keep separate accounts for each of the properties. If money needs to go between, let's say you have one property who your tenant is a little bit slow to pay, and you have another property where the account is flush because it hit all of your benchmarks and you're doing great. Rather than transferring money from one property account directly to the other, the trail of money should really go, you take it from the account that was flush, you transfer it to yourself as a payout, and then you loan from yourself to the company that needs the money. So you should be the point, and if I could like whiteboard it out, I would, but you should be the point where the money goes to you and the money comes from you, and don't transfer money from one property to another.
Excellent point. And a lot of the listeners also flip houses. So are you saying they should have separate accounts for each property that they're working on? Okay,
Yep,
thank you.
Absolutely.
Are you familiar with David Richter, who wrote Profit First for Real Estate Investing?
I am.
I love him. He's a dear friend. He's been on here twice, just like you. And
Awesome.
And do you agree in having separate bank accounts like he teaches in Profit First?
I do. I will say though that some of the Profit First stuff, if it feels like it's too into the weeds, or if it feels like it's something, anything feels like something that is more complex than what you will do, figure out a way that is maybe a middle of the road where you will do it consistently. So we have a lot of clients. I love Mike. I'm going to say his last name wrong.
McAlowis.
There you go. I love everything he's written. I've got every single one of his books on my bookshelf right now. And even his last book on marketing was awesome to read. But one of the things he talks about is the different accounts for this should be your profit account. This should be the account for this. This should be the account for that. And what I see is people will start out and they'll do it. And then all of a sudden, 2 or 3 months down the road, it kind of falls apart. So I love the idea behind it. But if you're not going to be consistent with it, be honest with yourself. If you're not going to be consistent with it, figure out what you will do that you're going to be consistent with. But that lowest bar is having separate accounts for each of your properties.
You are answering a lot of these questions that I already have on here, and I love all of it. This is such a great conversation, and super important about separating funds for properties, especially flips, because that can get very muddy quickly. So thank you for reinforcing that. And for the listeners who do the profit first, you are a great bookkeeper to help them through that because you understand that process. So we can put those two together. So here's my next question. What are some common mistakes real estate investors make when it comes to bookkeeping and taxes? Totally loaded question.
Right. Biggest mistake, the absolute biggest mistake is the not keeping separate accounts. I would say the second mistake is not having a relationship with a tax professional who is familiar with the real estate market and working with real estate investors. This is not the same as working with real estate agents, but working with real estate investors. Now, somebody who's seasoned as a tax professional and working with investors, it really doesn't matter if you own rental properties, if you flip properties, everything within that realm, you should be fine. But it hurts my soul when I see we talked to somebody yesterday who they had set up a partnership, and essentially because they weren't tracking things, because nobody had told them, but because they weren't tracking things correctly, they just turned all of their records over to the tax person that they had previously used. The tax person essentially filed a Schedule C, which is not what you should file if you're in a partnership, and then just split the profits 50-50. So there were so many different things that were wrong with it. And yes, the tax professional should have said, hey, this isn't my specialty. Absolutely. There are areas that are not our specialty, and we're very honest in saying it's not really our specialty, but here's who we can refer you to. Like, we don't work with nonprofits, but we have a great referral partner. But there should have been some education. And when we kind of recalculated things, we just on the whiteboard, he had overpaid taxes by like $72,000.
Wow. My goodness.
Right?
That hurts my soul a little bit too.
I thought when he was wrapping up the call I really thought that poor man I'm pretty sure he was crying. Now we'll amend his tax filing and he'll get that money back, but it's not like he's going to get it back and snap of his fingers. It'll probably take 2 or 3 months to get that money back. But just make sure that you're working with a tax professional who's well-versed. And if you ask them straight off the bat, do you have other real estate investors, or do you have other house flippers, or whatever your specialty is, they'll usually be, in my experience, most tax professionals will usually be pretty honest.
And something you brought up in the last episode is you should not be having your first conversation with your tax person at tax season. You should be having conversations with them throughout the year for certain things. Is that correct?
Yeah. So I recommend asking, it's kind of like a date, right? You're asking these things. You have these benchmarks. You have these things that you are requesting or that you are expecting from your tax professional. And you may need to call a few tax professionals for them to answer the questions correctly. But this is a relationship that you're going to have for a long time. I mean, most clients stay with their tax professionals for 10 years, 15 years, maybe even longer. So that being said, that's a long-term relationship. I mean, we have seen clients that they have gone through several marriages in the time that they've been clients.
Wow.
So, right, we're the relationship that endures. But a question that I would ask when you are interviewing the tax professional is, I would say, do you meet with your clients throughout the year, or what does it take to meet with you throughout the year? And it should be an easy answer. It should be something like, oh, yes, I regularly meet with clients throughout the year. That would be one that I would like to hear as an answer. Or all of my clients have access to my calendar link and they can easily schedule. But if they tell you that, I would check out to see truly how easy it is to schedule through that calendar link.
Awesome. Because I think that is so, so very important. And I hate to bash other companies, but there's companies that do say this for company, like they write entities or whatever, but then they say, oh, and we have tax specialists as well. So I think going to tax people and bookkeeping people who have it all in one spot, instead of like having it be a little side note for a different company. I just want to reinforce, I'm not thinking of any specific company. Actually,
I'm thinking of some specific company.
I'm trying not to, but
I think when you're brand new and you're 20 and you're in your first career and you have maybe your first real job, to go to we'll call it a 1040 shop, to go to a 1040 shop and have said 1040 shop, which probably is in a mall somewhere, do your taxes for you, or to use an online program and do your taxes yourself, you're fine. But when you do certain things throughout your life that are more complex, you need to pick professionals that align with that higher level of complexity. Eric and I go to probably 2 to 3, gosh, last year we went to, I think, 6 different trainings on real estate investing, and things in that realm, because it's something that we're incredibly passionate about, but we also want to know that we're able to deliver the best information to our clients. Those 1040 shops, gosh, it's really hard not to say the name. And I don't want to bash. I mean, I have a very good friend who I think he owns 11 of those 1040 shop franchises. And he's very honest with, yeah, we're really good at what we do in this space, but no, this space of real estate investors, that's not our niche. But they're probably not going to be honest enough with you either and say, no, we're not going to take your business. So there is that piece to consider. But if you are a real estate investor, I don't care if it's 1 property or 100 properties, please do not try to do your taxes yourself. And please do not use a tax professional that has an office in a shopping center. If you are able to buy your laundry detergent and they have a desk in the same location, that is a no-no. So,
oh my gosh, you are awesome.
That was delicate, right? I'm not bad.
Very well said. You did great. So listeners, think of it this way, because I see a lot of newbie people saying, I'm looking for a contractor, like a contractor to do this, 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 and this at my house. No, you need a tile person, you need a plumber, you need people who are efficient in a specific trade. When you see these trucks that say, we do siding, we do plumbing, electrical, and like, no, you are good. I'm only going to hire people who are great at what they are specified in. So same thing goes with who you are choosing to do your taxes and your bookkeeping. So since it's tax season and everyone's getting focused on this, what are some top tax deductions that real estate investors often overlook?
I'm going to give you one.
Okay.
There's others that people are going to say, oh yeah, that's obvious. The obvious one is not tracking your expenses, right? Not tracking all of your expenses. But the big one for real estate investors, especially if you have multiple properties, is mileage. And I believe the mileage rate right now, gosh, I should have had it prepared. It just went up, but it's like 65 cents. that adds up incredibly quickly. And so you should have a mileage log. Now, I will say this is one where you can keep, and I hope that my partner doesn't want to strangle me for this, but this is one where you can truly keep one log for all of your holdings, but keep a mileage log. And in that mileage log, if you're keeping a handwritten mileage log, your personal residence is your starting point. Whatever the property you're going to is your end point, or if you're going to Home Depot or wherever it is, make a note in there of the property that you're going to. There's a whole bunch of online apps that can do mileage tracking as well. We don't necessarily, recommend one over the other, but if it's easier for you to have it as an app on your phone, by all means, have it as an app on your phone. But mileage is one that we see. I find us asking like, okay, thank you. We've got all of your property information. We have all of your 1098s and all of this and all of that. Let me see your mileage log. Oh, I didn't track it this year. Do you think it's really worth it? Yes. Yes.
I remember in the app, am I allowed to say an app? Are you okay with me?
Sure.
It was
Yeah.
Mile IQ.
I like that one.
It was so good. And so then when we bought my car that I own now, we actually bought it through our business. So I don't have to track him anymore because the actual car is paid for by our business and all that.
Awesome.
Okay. So I'm like, I
Awesome.
didn't want to think I was leaving something out here. So before we go into the second part of the podcast here, which is what makes Melissa Broughton a badass, which you
Okay.
are, my last big question here is, what is one piece of tax or bookkeeping advice you wish every real estate investor knew?
It is so worth it to take the time every month to set an appointment with yourself to do your books. I'm not saying that you need to go out and hire a bookkeeper. And in fact, most real estate investors truly don't need to hire a bookkeeper. You don't have a ton of transactions. But sit down, spend an hour, spend 2 hours. We've even got a book that I'm happy to send a free copy to any of your listeners. I'm sure you'll put that in the show notes, but make an appointment with yourself every month to work on your books for your business and use, or your property holdings, but use something simple like an accordion file folder that has 13 pockets, or it doesn't have to be a filing cabinet, but if you're somebody who is not going to take the time to do things, make it as simple as possible. So with filing, you can file things by month, and then at the end of the year, break them out by property. That's a really easy way to do it. Or you can have a filing system where each property has its own individual folder. But that's really the biggest thing, because there's so many things that get forgotten when a month or 2 or 3 passes. And it just, gosh, if we could calculate the bazillions of dollars that are left on the table in missed tax deductions, right?
I remember, I said we were going to the second part of the podcast here, but I know even home offices are things that there's like tricky things with how you can deduct it a certain amount of space. And I mean, we work out of our home and we have our own offices. And then I have this podcast studio, also another room in the house. And so these are also tax write-offs as well, correct?
Yes, absolutely. So that would be something, and the home office deduction is kind of a hot topic with different tax professionals. So that's another good question that you can ask them is, how do you feel about the home office deduction? Because there's the home office deduction, which is an expense, and then there's home office depreciation. Now, we don't really ever recommend the home office depreciation, because when you sell that home, you have to recapture that. You may have to, and I'm not trying to scare
Interesting.
anybody, but you may have to pay yourself back if the depreciation doesn't match the value of the house, or if the house has gone up in value. So we like the deduction side. We don't like the depreciation side, and we'd be more than happy to have a conversation with a potential client and explain why. I just really want to say, be willing to take the time to interview a good professional to find somebody that fits with what you're looking for.
And speaking of that professional, how do people get a hold of you if they want to talk to you about becoming their bookkeeper and tax advisor?
Sure. Busybeeadvisors.com. Jump on our website. There's actually, we just posted some new freebies. So I think right now it's a free user guide to QuickBooks Online, which we're getting. It was something that I put together a while ago that to answer a lot of common questions that we get. So there's some good, valuable freebies on there. But you can book an appointment with one of us right there on the website.
All right, I do have one more question.
Sure.
And everything that you're mentioning is like spewing into different directions. I'm like, oh, I want to ask about that. Travel. So if you are, I planned a trip for some real estate investors through Rain, and we're going to Iceland. And I'm paying for my portion. Everyone's paying, but it's not a moneymaker for me by any means. But can people use it as a tax write-off? And I've researched this, that you have to have a speaker that speaks for 4 hours a day at least and do this and that. I tell people, have a conversation with your advisor and certain things that need to be done. But is there a way for me, as I'm kind of the leader of this, to help it look more like, because we're just traveling Iceland. We're going to be on a bus at least 45 minutes to wherever we're traveling that day, where we could use that time to talk about things and do things. But it is 100% networking, because a lot of times you do great business with people who you know, like, and trust. So that is the purpose for me. And again, it's not a moneymaker for me, but can they use it as a tax write-off?
So the short answer is yes.
Okay.
The piece where it falls into is really advertising and marketing, because you're networking with others. It would also potentially fit into the education aspect. There are a lot of benchmarks. I mean, honestly, we could spend the next hour and a half talking about this. So I can send you kind of a cheat sheet.
Okay.
But everybody's tax situation is so completely different that even with that cheat sheet, I still will recommend reach out to us, reach out to your tax professional, and phrase the question in the way of, I'm doing this. How can I make it tax deductible for my business? And they will tell you the benchmarks that you need to meet. Now, if they don't, then that's a huge indicator that you need to find a different tax professional. Because yeah, there are some benchmarks.
Well, wonderful. Thank you for clarifying that. And good. That is actually great news for people who will be traveling with me in June to Iceland.
Awesome.
I know. Honestly, I was like, I really want to go to Iceland. It's been on my bucket list, and I'm like, might as well invite some other people, and found a tour, and it just blew up overnight. So I am super excited about it. All right. We are moving to the second part of the podcast here, which is what makes Melissa Broughton, that's how they say the high school here, Broughton. Melissa Broughton. What makes Melissa Broughton a badass? And I use the acronym BADASS, and the first letter is B for book. What's a book that's made a huge difference in your life?
Ooh, let me look at my bookshelf. What did I just read? Pound Foolish was awesome. I just read it.
Pound Foolish?
Pound Foolish.
Ah. Helene Olin?
Oh, you're trying to read. Yeah, Helaine Olin.
Olin.
So it talks about not necessarily real estate investing, but it talks about the kind of the dark side of financial investing and what to be aware of, with how we talked about good tax professionals, bad tax professionals, kind of how to navigate your way through finding a good financial advisor versus one that maybe is not great or could potentially be a little bit shady. So it was a super, I mean, it's 300 pages, but it was an easy read, and it was a very eye-opening read for me. So I love that. I love these questions.
Good. All right. The first A in Badass is for advice. You've given us excellent advice on this show, but what's the best piece of advice you've ever received?
Creating a strong, solid foundation before you kind of hit the launch is a lot easier than trying to recreate it after the fact. So there's a phrase that my grandma used to always say, which was, do something today that your future self will thank you for. Now, personally, I
Aw,
think it was, I know, personally, I think it was like to make sure that I got all of my dirty laundry out of my room so that I had clothes in the future. But it can apply to so many different things. But really, do something today that your future self will thank you for, whether that's pushing yourself and going on a trip to Iceland with my friend Jen, or investing in additional education to better what you're trying to do as far as being a real estate investor, whatever it is, do something today that your future self will thank you for.
great advice from Grandma. Thank you, Grandma, for that. That was excellent. All right, the D in badass is for drive. What drives you to be successful?
I am, I think about this, and my kids used to tease me about it, but when we saw my oldest son over Christmas vacation, he was really excited to show me that he has started to do what I'm about to tell you, and that is create a vision board and create a new one every year. I have a vision board that goes up in my office at the beginning of the year, and it's just kind of the things that I would like to accomplish. We've got some exciting stuff going on. Our youngest son is in the process of deciding on colleges, and we've had some college offers coming in. So I've got like a football
Nice.
guy on there. I've got we'll be moving when he leaves for school. So I've got a picture of a few different houses that every time my husband sees it, he kind of goes, "Oh, and that one has a pond. How fun."
I love vision boards. I actually last year, and I do them at the end of every year for the following year. And it's so funny because I actually put Iceland on the one last year. It's just a random, like, with a plane next to it. And then a girlfriend of mine who was like, "Oh, I'm a travel person. If you ever want to plan a trip," I'm like, "I want to go to Iceland." And she's like, "Let's put it together." I'm like, "Really?" And so it was so easy, so affordable too, to have her do it. I threw it up there. So glad you brought up vision boards, and they
Love
do
vision boards.
definitely drive you to success. Because I have mine right over here, and as I'm looking off into space from
Right.
not but right near my computer, so I can see all the time. And by the way, I don't use magazines anymore. I don't know where you get your I download them. I either do them on Canva, and I'm like, I want a house with a pond. I'm with you on that. And I have them pull up or just do a search on the internet, and I print that image instead of cutting damn magazines. I don't got time for that. But anyway, I went off on a tangent there. All right. The second A in badass is for aspiration. I'm a big goal setter. So what is a goal you are currently working on?
So I am really all about giving back. And one of the things that Eric has teased me about for a long time is anytime we're out and about, I really try to like hire people. Like I believe anybody could become a bookkeeper. And what that has led to over the years was me putting pen to paper. In August of last year, I launched a course that teaches. Originally we marketed it to stay-at-home moms. However, there were a lot of men that were gravitating towards it. So we've opened it up to being gender neutral. We're friendly to everybody, but it's really a way that that we feel, or that I feel I can give back to help overcome people feeling like they don't have choices. If I can give 100 people this year some additional choices in their lives, I would be a very happy girl. So we did 800 last year, so setting the goal at 100 would be a little bit low. So I would like to see 2,500 people this year.
Good for you, Melissa. You are amazing. All right. The first S in badass is for systems. I'm assuming, being a bookkeeper, that you have plenty of systems. So what systems help you achieve success?
We use and Swear by Monday. It's the project management tool that we use. We actually have two boards within our firm. We have a tax board, which is Eric's realm, and then we have the bookkeeping and accounting board, which is myself and my team's realm. And that is kind of that in my calendar are what I live and die by. If it's on my calendar, it'll happen. If it is not on my calendar, it is guaranteed that it is not going to happen. So
Guaranteed.
yeah, guaranteed. So using some kind of a project management tool or a to-do list is I would say is at the top of the list of that for me.
And is Monday like spreadsheet oriented?
Monday is a cousin to Slack is one.
Oh, okay.
There's another one, but we've got 19 bookkeepers that we work with and 300 plus bookkeeping clients. So to try and manage all of the different things that happen at all of the different phases would be I would be lost all of the time. So this tells me exactly what I need to do and I can assign it to other people and it's fabulous.
Got it. I was confusing it with one that someone brought up recently, and they're like, oh, if your husband loves spreadsheets, he's going to love this. And I thought it was the same one, but I digress. All right. I could talk to you all day. I just love you to pieces. You are amazing. And the final S in badass is for success. What does success mean to Melissa Broughton?
Now, I thought you were going to say something like sexiness because I am married to the cutest guy in the world, but
with some great facial hair.
Right. Although I tease him about it, that it's too long and he cut off like 4 inches of it and I didn't even notice. So he's like, I'm not trimming it again. Okay. So it was success. Tell me your question again.
What does success mean to you?
Success means to me being able to, actually it's always meant this, it's being able to spend time with my kids and my wonderful husband doing things that we consider are fun and enjoyable. So we got back from Christmas vacation not too long ago. We took everybody to Disney World in Florida for 10 days. And
wow.
That is what success means to me. It was pretty awesome.
I would think success is drinking a pina colada and saying, peace out to my...
Right. Yeah, yeah.
Well, Melissa, you are fabulous and you're such an educator too, which is kind of rare in this industry. And that's why I just have sent people your direction. And one more time, how do people find you?
busybeeadvisors.com. If they would like a copy of my newest book, The 4-Hour Bookkeeper, just fill out the sign up form on the website and in the comments section, say, send me the book. We'll send you a book, no obligation or anything like that. And then I will make sure to send you the how to make that Iceland trip a write-off so that you can post it in the show notes.
Thank you for that. And also check out their podcast, The Real Buzz.
Oh, yes. We're definitely ourselves on there.
Well, you are fabulous, and I thank you so much for coming back on the show today. I hope I get you on again if there's changes in taxes and all that fun stuff. So you are always such a pleasure to have on the show. Thanks for being here today, Melissa.
Me too. Thanks, Jen.
Absolutely. And that is all. Thank you for listening. We'll catch you on the next episode. Now, go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josey by visiting therealjenjosey.com or become a member of RAIN by registering on rainmastermind.com.